So the shilling still relatively strong, but feeling a bit of pressure. It's month end. It's demand from fuel importers. For as long as Kenya is a fuel importer, for as long as oil prices are high, it's going to feel this pressure. So can we really say that we're going to see a shilling trading in the 88, 85 shilling range in the next few weeks? Is that feasible?
I think it's very likely. The end month demand from importers was expected, and what we are seeing is actually they're just coming in to cover. They're basically covering their short positions, covering the demand they have, and that's it, nothing else. Because everyone expects the shilling to strengthen further, so no one wants to go long on. No one wants to go long. So basically, of course, we might see the shilling weaken slightly because of the demand, but once this is over, in the next one and a half weeks, we should see the shilling continue to strengthen further.
I mean, obviously, a lot of companies, particularly banks, have had major negative exposure to a volatile and a significantly depreciated shilling, and it started to reflect on their balance sheets. Is that a temporary situation? And for companies going forward, especially in an election year where inflation could rise, what would be a hedging strategy?
First of all, on inflation, of course, we expect inflation may rise in November and December, but we expect it to start to come down come the first quarter of next year. And basically, also the shilling, we expect it to continue strengthening. The central bank is not looking like loosening their policy anytime soon. So I mean, the shilling will continue strengthening, and most of the banks, commercial banks that were holding long positions in USD have unwound those positions. We've seen those shillings come into the market, and they've been mopped up through the repo and T-bill auctions.
All right, MPC meets on Thursday. Like you're saying, you're not expecting loosening, so they may hike again. Will they be as aggressive as they were at the last MPC?
My personal opinion is that I actually don't expect them to change to hike it any further. We're seeing the effects. I mean, liquidity is extremely tight. We're seeing the effects on commercial lending rates. So the effects have actually come through of the tightening they've been doing over the last 2 months. I mean, it's gone up by about 950 basis points so far. So they may let it run at the current level for a bit more, maybe for the next 1 or 2 months, so the effects can come fully through to the market.
Interbank rates are high, obviously, on the back of rising interest rates. It's had an impact on treasury bills and the yield curve. It makes government papers very unattractive. That's a bit disconcerting because, like I said, you're going into an election year. We are likely to see the government coming to the local debt markets. They need to raise cash.
Yes, I think the central bank is in a bit of a difficult position. They have to look at their cost of borrowing, and at the same time, they are under pressure because of fiscal policy, and which has not contracted at all. In fact, we expect it to continue to expand as we go into an election year. So central bank is in a bit of a tough position. Last week there were stories that they are looking to revive the Eurobond, which they may issue before the end of this fiscal year. Or they may look at other sources of, funding, because what's happening especially at the short end of the yield curve, which is where they would rather stay. Because if you're going to pay a high cost of borrowing, you'd rather borrow short. So we're seeing, for example, the 91 days at levels of 16.6%, and the 2-year shot up all the way to about 22%, so basically we now have a fully inverted yield curve. It's made it very difficult to price bonds on the yield curve, especially long-term bonds. That's bonds between 15 to 30 years. But I think basically it's still not unattractive. The short end of the yield curve is very attractive. If you're getting returns of 22%, that's a real return. It's actually beating inflation, which is very attractive.
Let's talk about that Eurobond. It's not a big bond. It's just $500 million, but it does give international investors an opportunity to have their say about how they see risks in Kenya and what they're prepared to pay for investments and debts in Kenya. And obviously, whatever is decided at that level will have a broader impact on Kenyan companies being able to raise money internationally. What would you say is a fair pricing of Kenyan risk?
That's true. Kenya's our credit rating is currently at about B+. And of course, with the GDP figures looking good, and if the next year's elections go smoothly, we do expect this may improve. The biggest problem will actually be not our rating and pricing of Kenyan risk. It will actually be the other market fundamentals we're seeing. For example, what's going on in the Eurozone. That may actually come to, we may see investors who are risk averse, as we've seen in the equity market, and they're not too keen on emerging and frontier market debt and equity.